FSA? We've got a lot of different agencies within USDA, and there's lots of acronyms. So we're the agency that basically does a couple of different things. We provide all the commodity and price support programs, which if you hear about those, it's going to be corn, soybeans, wheat, some of your sorghum, some of your major crops. So any programs you hear that are their price support or commodity programs, that's on what we call our commodity side. And then we also have the farm loan side, which is the result, FSA is the result of the old ASCS and the farm loan functions of the old Farmers Home Administration merging in about 1996 after the 95 Farm Bill. So what I do, I'm a farm loan manager. Like Jason said, I cover 5 counties out of Ada, Pontotoc, Potawatomi, Seminole, Hughes, and Cole. I've worked all over the state. I've worked in the Pauls Valley office, the Purcell office, Woodward office, Kingfisher office, and now in Ada. So I've kind of got a good idea of agriculture throughout the state. I've loaned money to anything you can imagine. At one point in time, I had more dairy loans than any other county in the state or any other office. I probably made more vegetable operation loans than any other loan officer in the state. So I've done a lot. But as it says, we're there to provide credit to ag producers who are unable to obtain private credit. So if you're worth a couple $1,000,000 and you have a great non-farm job and you make a lot of money, we're probably not going to be able to make you a loan. We're not supposed to be in direct competition with banks or farm credit. We're supposed to be there to help people get started, help them out when they get into some issues and need some credit. We really target our stuff towards a lot of our younger producers that are starting out and towards our underserved producers. If you're a member of a socially disadvantaged group, we target a lot of our funds towards those beginning farmers and underserved producers. So if you can't obtain credit, you may be able to get a loan through us. Now we've got a bunch of different types of loans. And we'll go through some of those today. Like I said, I'm going to give you a broad overview of FSA loans, and then we'll talk a lot about the microloans. After the most recent Farm Bill, we had $300,000 total loan limits. They upped those a lot. They upped our real estate loan limit to $600,000. They upped our operating loan limit to $400,000. So they really upped those. We also have participation loan programs where you can get 50% or more of the loan for real estate from another lender. We can come in with 50% or less, and our rate's 2.5% fixed for up to 40 years. If you are an individual who is a beginning farmer or an underserved group member, we have what's called our down payment loan program. With that, you have to come up with 5% down. We can provide 45% on a 20-year term at 1.5% interest, and then you get the other 50% from another lender, a bank or farm credit at normal interest rates. They have to do at least a 30-year AM. A lot of times they'll do a 20-year balloon, but it has to be on a 30-year amortization. So that's kind of some of the things we do. Our operating, we can do annual operating expenses, or we can do term. Term, we're typically going to be talking about breeding livestock, machinery and equipment, minor improvements to real estate, those type of things. So we can go up to a large amount. Then we also have a guaranteed loan program, and I'll talk about youth loans in a second, but we can guarantee loans that banks and farm credit or ag credit make up to about $1.776 million. Now up at the top, the youth loan, that's one of my favorite loan programs. With the youth loan, we can make a loan for $5,000 to any youth between the age of 10 and 20 for an income generating project. So it's going to have to be something, a lot of times we'll do a cow-calf operation or goats or somewhere along those lines. They have to be a member of an organized youth group like 4-H or FFA. They have to have their parents sign off on the application, and they also have to have a project advisor sign off, saying that they'll assist that youth with their project. I've done these for the last 30 years. The best one I ever did is kind of an odd one. I did a 1-year loan for a young gentleman down by Rush Springs. His grandpa grew watermelons for years and years. And he gave his grandson said, "You got 15 acres here, you can plant watermelons on this year. You're gonna have to do it all, I'll help you." So we planted 15 acres of watermelon. I provided all of the funding for the seed, the fertilizer, everything he needed with a $5,000 loan. It was the best watermelon year they'd had in years. Prices were up, production was up. He paid me back and bought a Mustang car. Normally, we loan for 3 to 5 cows, and they'll put those cows out with mom and dad's herd, and then they'll go ahead and trade labor for all the expenses, so they don't have any expenses really. one calf will normally pay for our payment. They'll retain all the heifers, and they'll grow those herds to where they get to a point that it's something that can really be a start if they get out of high school and want to continue with that, or it helps pay for college. It's a great program. Had a lot of fun with it over the years. Microloan program. This is something that just came out 5 or so years ago. And it was a program that was designed to address what we felt was something we were missing. It was a program designed primarily for those beginning, smaller operations. We have the big loans, but we didn't have just a small loan that, if you come in, our application process is pretty extensive for one of our larger loans. So we decided, or we being the powers that be, that we'll make a program and we'll target that towards these smaller beginning operations. Started out with a $35,000 limit. They've since raised that to $50,000. But you can use it for annual operating, fertilizer, seed, those type of things, or feed if you've got a livestock operation. Or you can use it for term uses, for 7-year term, where you buy equipment, buy breeding livestock, and those type of things to get your operation started. And what we found out on some of these beginning operators that were really wanting to get started in agriculture, they didn't have the ability to go to a bank and get credit. So they did what was the easiest. They started using credit cards to fund this operation. And so, you're trying to make an operation work with 18 or 22% interest. It's pretty tough. So this is an option for those individuals to not have to do that. A very modest interest rate, generous terms with a 7-year term on our intermediate term loans. And so it really helped out getting people started in agriculture. Like it says, $50,000. Now we have not just operating, but we have farm ownership loans. You're not going to buy a large operation with $50,000, but as you get in your application or in your operation and you want to grow it, and you say, well, I might need a facility to process whatever I'm growing, or a barn or something along those lines. We can use those FO funds to build those type of things. We can also use them for smaller pieces of land. If you get to a point in time where you think you can purchase land. So we can also use that as a part of a down payment for a larger tract of land if you're getting a loan through Farm Credit or a bank. So there's many things we can do. We don't make very many of the real estate loans through microloans. The bulk of these are going to be term operating loans, actually, a few annual, but we do make a lot of microloans. When microloans first came out, we had an office in the northeast part of the state that was the #1 microloan office in the United States. And so we make a lot across the state. Just to give you a little bit of an example about what we do in Oklahoma, we are the #1 FSA loan state in the nation. We have more borrowers in Oklahoma than the next 3 states combined. So we make a lot of loans. We're out there, we're working hard to get people in farms, to keep them in farming. And when you go to visit our offices, and you may think that we're asking tough questions or we're not being super receptive, and you think, gosh, they don't want to help. We want to help. We want you to be a success. Nothing makes me happier than when people are able to timely pay their loans and pay us back and are successful. But we've also done this a long time, and we've seen the failures and we've seen the ups and downs. So don't think people don't want to make you a loan when you come to visit our offices, because, like I said, we make more loans by far than any other state in the nation. We're just trying to do what we can to do due diligence to help you be a success, because that's our goal, is to help you all be successful. So these are some of the things that we can use our loans for. Lots of stuff, pretty much anything that the small farming operation needs. We're going to be in a position to help you out with that. With our annual operating expenses, we don't have a revolving line of credit like a normal bank would. We've got annual loans. For instance, if you get a $10,000 loan from us and we spend those funds out for you to buy $10,000 worth of operating expenses for that annual basis, fertilizer or whatever you're purchasing, once that's $10,000 spent, it's spent. And if you pay $5,000 of it back, we can't then reloan the $5,000. We can't revolve that money like a normal bank can. So annual operating loans get a little bit more difficult to deal with. It just takes a little more pre-planning, though, to make sure.
Can you reapply?
You can reapply, yes. But we need to make sure that we get a big enough loan starting out that we're going to make sure and meet all your needs, and we don't run out of money 2/3 through your production cycle. And that's making sure we do everything right up front. If we're doing an annual operating loan, we're going to be looking for 150% security. So we're going to be looking at taking the crops or livestock you're producing, plus potentially an additional 50% of the value of that loan as additional security for that annual operating loan. If we're doing a term operating loan, then we're just going to take a lien on what we finance. So if we're buying a tractor and you have 5 tractors, we're just going to take the lien on the tractor that we buy with our loan funds. Or you do have the option of saying, well, I don't want you to take a lien on that tractor. I want to give you a lien on my cows. So we can substitute collateral, but we're not going to take a lien on every piece of machinery you own or every piece of livestock that you own. If you already have some cows, say you have 10 cows, we loan you money to buy 10 more. We'll have a UCC filed that covers all your livestock, but you're only required to keep a base herd level of the 10 that we loaned on. You could sell the other 10 off and keep that money, but you have to keep our base herd level as long as we have that loan outstanding. One of the more important things about this is this right here, shortened application process. And we're going to go through an application here in just a second. The application is very basic. What we suggest people do when if you have a specialty operation and you're doing a lot of specialty vegetables or livestock, there's really not a way to explain it on our application. So we ask that people go ahead and fill out a marketing plan, a production plan, and attach that to the application so that we as loan officers can get a pretty good idea on how to make a projected cash flow based upon what you want to do. We'll get the microloan applications in and somebody will put on there, vegetables, $30,000. Well, that really doesn't help us a lot. We need to be able to break that down, see what you're projecting to get that income. Are you projecting you're going to sell 1,000 pounds of tomatoes at $8 a pound? Well, that's probably not going to be something we can project. We're going to have to go back and look at what they're selling for, what we can kind of justify using as a projected price for those commodities, whatever they are. If it's a normal ag commodity such as livestock or grains that are sold in a normal commodity situation, we've got a price guide we utilize for that. It includes goats, sheep, those type of things. When you get to vegetables, then we have to go out and kind of research a little bit more to get what we feel is a good number to put on those projected prices. Rural youth loan, once again, it's kind of gives that $50,000 or less. That's something that may catch somebody if you live in Oklahoma City. But for the most part, Oklahoma City or Tulsa, about the only ones that are going to keep people out of that. Rates are 2.625, pretty good rates. That's one of the things we can do. If you can't go to get a loan at a bank for any of our loans, if you're going to go get a cattle loan, you're looking at typically a 3 to 4 year term on that loan, 6+% interest rate, and they're going to look at, they want about 30+% equity. We'll do 100% loans, we'll do a 7-year term, and we'll do low interest rates. So we can do a lot to help improve a cash flow position of somebody to where they can possibly make that deal work. And this is something that I like to talk about a lot. Like I said, I've been involved in a large number of specialty operations, and marketing is the greatest hurdle to the success of any specialty crop, because it doesn't matter how good a producer you are. If you've got 1,000 pounds of okra sitting in the back of your pickup and nobody wants to buy 1,000 pounds of okra, then it does you no good. So when, and like I said, I've been involved in commercial vegetable production for a long, long time. And I've been involved in lots of loans where you thought you had a market because you had a handshake, and then once again, you have that 1,000 pounds of okra and it doesn't work. So oftentimes, don't just have a primary market, have a backup plan if this doesn't work. Build relationships with wholesalers and with other groups to be able to have a place to go. Know your market. And I see people all the time, talk to people all the time that say, well, I grew a garden in my backyard and I went to the farmer's market and I sold every tomato I could grow for $2 a pound. So now I want to grow 5 acres of tomatoes or 10 acres of tomatoes, and I can sell all of those for $2 a pound. There's a limit to how many tomatoes you can sell at $2 a pound at your market. So you've got to know your market. Is it a current market? Is it really there for you to go sell 1,000 pounds of tomatoes a week at $2 a pound? Or is that something that you need to cultivate and develop and not start shooting for the moon, but let's grow that market. Let's get people coming to me, get people liking what I produce, and slowly but surely making them loyal customers. That's where specialty crops typically are the most successful. Once again, it's not the field of dreams. If you build it, they won't necessarily come. So don't assume if you produce it that you're automatically going to be able to sell it, or you're going to be able to sell it for what you think you can sell it for. I don't know how many times I heard almost daily selling vegetables, well, I can go to Walmart and buy corn for $4 or four ears for $1, or I can go to Walmart and I can do this. They always think that you as a farmer should be willing to sell at a wholesale level without thinking that tomato was put on a truck a week ago. That corn that looks amazing is going to taste about like that chair cushion because the sugar left it 3 or 4 days ago somewhere in either Florida or Colorado. So you've got to get people that are willing to come and pay the higher price because they know they're getting the better quality. And have a marketing plan you're confident in. Don't just say, gosh, I've always wanted to do this, I'm going to do it, and then I'm going to figure out what I'm going to do with whatever I produce, whether it be goats or eggs or specialty vegetables or whatever. And also know your projected profit. We're not looking at the gross, you and I and everybody else in here. We're looking at the net. So it doesn't matter if you can produce and sell tons of stuff if it costs you more to produce it than you can sell it for. And I used to learn a lot of dairies. and I always said one of the problems in the dairy industry was that for generations, the goal has been to produce as much milk as possible. So, everybody was trying to build that Holstein herd up and produce, 28, 30, 32,000 pounds rolling herd average. And that was great. And I had dairies that were doing that went out of business because they were losing money. They were in the top 5 DHI herds in the state, but they were losing money to get that production. So know what your profit margin is. Know that you have a profit margin. Know that you're not spending all your money just to get experience, because we all don't need any more experience. Because everybody that comes to me for a loan, if it's any crop that is not marketed through normal to market, you can't take it to the local elevator and sell it, you're going to get this speech from me. Because once again, I want you to succeed, and I want to do everything I can to ensure that you will succeed. And marketing, whether it being aquaculture or a vineyard or commercial vegetables or goats, or just because you want to grow more goats to show them for your kid, and you have gone out and you've had to pay $500 for a nice goat for your child to show, doesn't mean if you automatically start raising more goats that you're going to be able to sell every one you have for $500, because you don't have a name. And name is what sells those type of animals. So don't assume that anything that's going to happen. Loan application. You can get online, like I said, fsa.usda.gov, and look to see where you need to make application at. Anybody that calls us, we will email them an application. We will also include in that email an example of how the best way is to fill that application out. And what we ask typically is you try to fill out as much as possible. Don't get frustrated. Don't get stuck. If you have any questions, call us. Set up a time to come in and we'll help walk you through anything you have problems with. But we're extremely busy and extremely short-handed, so don't come in and say, I just can't do this, like a lot of people do, and they haven't even written their name down on the application. So, make a little bit of effort. Don't get stuck with it, but make a little bit of effort, because I don't know what it costs you to live a year. I don't know all these things that we need to get on that application. And so anything you can do to help speed that along is good. These are our interest rates. Like our operating loans, whether it be a microloan or a larger loan, 2.625, these rates can change monthly. It's based on the cost of the government borrowing money. So, I've seen these operating loan rates down below 2% in the last couple of years, and I've seen them over my tenure be about 7%. So it all depends on what it takes to borrow money. These down payment, that's the one with the 545.50 loan, where ours is 1.5%. Then the joint financing, as long as you get, like I said, greater than 50% of that real estate purchase need from another lender, we can do 2.5% on that. In order to be eligible for any of our real estate loans, you must have operated a farm or ranch in a management capacity in at least 3 out of the past 10 years. So if you've always wanted to farm and you've never been involved in agriculture, and you come in and say, I want to buy a farm because I want to farm, you're probably not going to be able to do that because you don't have any experience. So Congress, when they did this, they said, okay, we're not wanting to saddle people with a 30 or 40-year loan that don't have any experience in agriculture. So what we like to see, or what really needs to happen, you need to be involved in agriculture, either managing an operation or have your own operation for a period of time to where you can get the experience necessary to be eligible for a real estate purchase loan. What we do a lot of times, people will come in and we'll talk to them. We'll make them an operating loan and they can buy those breeding livestock, or they can get their operation started after 3 years. Then they're eligible for a real estate loan. But a real estate loan is not really the place to start out when you're starting farming, unless you have a good background and experience. So just bear in mind, we can substitute a couple of those. If you've been honorably discharged from the U.S. military, we can substitute that for 1 year of the 3. If you've been in private business or in agribusiness in a management level where you manage employees, budgeting, we can substitute that. But we cannot substitute all 3. If you've got an ag degree or you have at least 18 hours of ag class work in post-secondary, we can substitute that. But we can't get around at least 1 year of actually managing a farm or ranch. Yes, ma'am. What we do on our real estate loans is we have to look at cash flow. So if we do a cash flow, which is projecting non-farm income and expenses as well as farm income and expenses, and you cash flow by $40,000, you've got great non-farm income, then you're probably not going to get a 40-year term loan. We do very few of those. We'll do a lot of 25 to 30s, but we're restricted on making sure we look and we try to tailor those terms based on the cash flow. So, and there's a couple reasons why I don't like to do 40-year terms. The first is it's not beneficial for anybody because you're going to pay interest like crazy. And if you pay late on that loan during the first few years of that loan, you put yourself in a situation where you will not pay that loan off in 40 years because it's so important. Such a small amount goes to principal in those first years of those longer term notes that if you pay a month late, that payment goes with an additional month of interest on it. We pay interest first, any payment we receive. So I actually had a loan years and years ago. It was a $200,000 loan. They paid about 5-6 months late the first payment. They paid zero to principal. They'd had that loan for 15 years when I left that office, and they still owed more than they had borrowed. They'd never made a dollar's worth of principal reduction because they always paid paid late by months. So, and also, if you get into trouble, we have a program called loan servicing program. So if you get into hard times, you can't make your payment due to drought or some other thing beyond your control, we've got a program we can run you through where we can service your loans. And when we talk about servicing, we can run them through a cash flow, and we can look at potentially extending the terms of those operating loans out for an additional 15 years to allow you to cash flow. And then also any real estate loan, extending it up to 40 years from the date of the original loan. So if you get in trouble and you can't make your payments, then we go in to service you. We're going to look at 40 years from the date of that original loan. If we give you a 40-year loan to begin with, and you have capitalized interest that's hanging out there, we're going to capitalize and restructure, you're going to end up with a larger payment than you had originally with that 40-year loan. So, it's kind of, we like to leave a little ammunition back there to help you out should you get in trouble. Pretty simple. It's just, fill in stuff about your name, address, and we have some things on here. We've got race, ethnicity, those type of things. The reason we've got those on there, and those are voluntary, but if you don't fill one of those out, we've got to put something down, and so we'll just put white. But if you don't fill, that's the default. But if you fill one of those out, then you are a member of a underserved group, then we can put you in a category that got more funding, and you can be eligible potentially for some of our other loan programs. There's not a lot of difference. Primarily, that gets you priority funding. There are some years when we run out of money, and so when we start out our fiscal year, we target the bulk of our funds towards beginning farmers and underserved producers. And the white males' money is kind of small. And then we'll hit triggers throughout the year where we get 6 months into the year, they'll release some of those funds that are unused out of our targeted categories. Get a little further, they'll release some more. So that's important to be able to tell us where your money needs to come from out of our targeted areas. Okay? Into the information. Most everybody's going to be an individual. Entities also include husband and wife. If you guys are farming together, you could be an entity that's just a husband and wife. You're gonna have to choose one to be the primary borrower, but this is what I was talking about when I talked about a projected plan of operation. Like I started out, to make sure going into this loan, everybody in the room sitting there is pretty confident that this still has a pretty good chance of working. Because there's nothing worse than getting 3 or 4 years down the road on a deal that doesn't work. And you owe more than you started with, and you've wasted 4 years of your life, and it hasn't worked, and you're dejected, and you may end up with a balance owing that you're gonna have to deal with after we sell the collateral. It's pretty broad, doesn't give you a lot of, so that's why we ask that you put some type of marketing plan together and attach it. Give us a little more information, because as we move through your application, we're gonna have to have more information to complete it. This is just a basic financial statement. What you own, what you owe. Any assets you have, any loans that you have, or any debt that you have. Pretty simple. Like I said, don't get bogged down at any point in time. Call and ask questions. This is just kind of an extension if you're an entity. And then this is some basic things, some questions to ask of you farm before you file bankruptcy. You've done any of these things. Give us some narrative of your farming experience. What have you done before in your life related to farming? Like I said, all this is in the back, and we've got examples with a lot of this filled out too. There's my information. Feel free to call me at any time. Even if you're not in my county, I'll be glad to visit with you and to get you to the right person if you're not in my service area. I'm available most of the time. We are an agency that spends a lot of time in the field. I'm out on farms a lot, counting cows, looking at equipment, and those type of things. So, feel free to visit with somebody else in my office or leave a message and I will get back with you.